We're live streaming. Hi, everybody, and welcome to the Sunday Market Update. It is great to have your company today as we get in with the team and starting to have a look at the market and what lies ahead of us in the week coming. Been a fascinating week for mine, and it seems to be technology day today, where things in the technology aren't perfect. The Fusion market account on my presenting laptop won't update because Fusion's server's down today. So I'm going to look over here and talk a little bit about the week to date, and I think it's been a fascinating week today. So US dollar index stays in the range, and it's a range that's been in and out of for a long time now. Anything below 94.50, not really interesting. Anything above about $91, not really interesting. A break of that range will be interesting, but right now the US dollar sits in that for us. We've got Bitcoin stuck inside the range of Tuesday's bar. But I got a bit of background noise going on here. Is that you, Julian? It's just a bit of breathing stuff coming through. You okay? Breathing's good.
If it is me breathing, Paul, I may be breathing. That's probably a good sign. And I will now go to mute while you do your thing.
Cheers, man. I'll be back with you in a couple of minutes. Look, Bitcoin sits within Tuesday's bar, and we all wait for this well discussed rally that's supposed to come in November. Certainly looks on track for it as it moves up, and certainly I remain bullish on it, so as everybody else right now. Nasdaq just goes straight up. S&P goes straight up. Oil really interests me, and Julian may pick this up. Ainslie may pick this up more. But the real news, look, here's my advice to you, right? Oil is now a professional traders only market. With what's going on in Cushing, Oklahoma, and WTI, where it gets quite complicated. So in the US, there's a build of oil reserves, but in Cushing, that reserves is falling. But more importantly, the type of oil that sits behind the WTI contract is falling quickly. So all of a sudden, there's not really enough reserve at Cushing to stand behind the WTI futures contracts. And that's starting to see the front-end contracts, that's the most recent futures contracts, differentiate from the longer-term contracts quite a lot. And it just means for me, I've just explained that as a layman, and I am a layman in this kind of stuff, but I do think that maybe oil is one of those markets right now that we could see big volatility over the next 3 or 4 weeks. I do think that if you're a professional, you should be in there making a lot of money. And if you're an amateur, you should have your risk well controlled or be out of that market. It does concern me. Got to say, I've been long-term oil bull from about $7. So I'm kind of okay where I am. I probably said to myself, but I've been there for a while, So do encourage you guys to be pretty cautious around it. But for mine, the really interesting chart of the week is gold. All of a sudden, we've got gold breaking out. And all this talk, right? So has crypto replaced gold as the universal hedge? Interesting, because as crypto is set to rally, gold does rally, puts in a new high. We're looking forward to getting Ainslie's view on this, and that's what we're going to have for the next hour. So we're going to have the team come in. We're going to have Julian do macro markets. We're going to have Ash do data. We're going to have Alexis do fundamentals. We're going to have Ainslie do gold and oil. We're going to have Big O come in and do the US dollar. We're going to have Gordon come in and do US stock markets. We're going to have Lloyd come in and do currency strength index. We're going to look at this market from every view we possibly can and see if we can provide you with some information to put you on the right side of more trades than we're not, then we're on the wrong side of this week coming. Julian, interesting time in the market for mine. I remain overall a bit of a bull, but some stuff's not quite as clear as I'd like. Mate, I need to unmute you.
Julian, unmute. Here we go. Yeah. Here we go. Sorry, rookie mistake. Oh my God, how many times have I been on mute this week, guys? And for those of you doing Zoom meetings, the bane of our lives. I think we have introduced a whole series of new words into the English language. One of them is you're on mute because it's all one word. Okay, so guys, what are we looking at? For those of you that have just missed my market update, please go and catch it later about the macro overview. I think really for what I'm seeing, I'm just going to put this slide up just to give you a quick sense of what's happening. Where I see the real challenges right now, you've got to slow down in the real economy. You've got to slow down in Japan. You've got to slow down in China. You've got to slow down in orders in Europe, and equally within America. You're just beginning to see that over-enthusiastic North American vibe that they love to have during summertime just start to ease off a little bit. This isn't about just supply chain constraints. Remember, imports into America, the actual number of containers is up 50% year on year. It doesn't get any better than this. That's an insane growth that they have never seen over the course of the last 10 to 15 years, right? Insane amount of growth. So not surprisingly, the system is creaking a little bit, okay? So when we see that coming through as inflation, is it transitory or is it permanent? I am hanging on by my fingernails to my transitory inflation view, and maybe I'll show you guys a quick slide just to continue to hold my own in that respect. But I do feel that I am literally standing in a field and there's probably one or two other people next to me, and in the other field it's full of people who believe inflation is permanent. So right now I'm just going to say I think I'm almost alone with that view. However, the key thing about anything, and this is where it starts to really matter, right, is that stock markets don't care. Okay, when you think about the real economy, they don't care. Right now, they are just going up. It is a break up. It is a crash upwards. Okay, in American stock markets, we are seeing even more crazy valuations than we saw before when we thought it was expensive then. It doesn't matter. Trade what you see, and what we're seeing now is an upward movement in stocks. Don't be short, don't be shy. This could be an analog of 2007 and what happened to the stock markets there, where they rallied despite the real economy struggling and despite the credit market struggling and despite the cash flow issues that were going on. Underlying that, we all sat there. I remember that time very clearly as a trader. I sat there and I was scratching my head going, why the hell are equity markets rallying? There's no good news out there. They didn't care at the time. They just went up. So don't miss out on those opportunities like George Soros did back in 2007. If it's moving upwards, just play the trend game and be with it. And then really, for those of you that weren't there, I did the Super 7 review. So let's just go through a couple of things, guys. I just want to show you this. Look, here's a couple of PMIs for you, right? These are leading indicators of what's going on in the world. Look at this, turning down. That's China, Japan. Let's not talk about Europe because I've been there, but this is, I was talking about it before, but this is the ZEW index in Germany, turning down. Okay, so what are we seeing? This is where I have this view right now. Okay, unemployment, inflation expectations in the stock market, all the attitudes out there. Inflation is permanently higher. Unemployment is really, really low. No, it isn't. You need to look underneath the figures. Literally lift the cup, lift the lid on those figures. And the stock market expectations right now are as bullish and as positive as they possibly could be. Retail involvement is high. The market is rallying. Who cares about the real economy? Literally, who cares? I feel it's one of these Wile E. Coyote moments, right? We have literally run off the cliff. We do not know. Momentum is carrying us here, but we do not know that there's nothing underneath us and we're about to fall. For those of you that have that card, remember that cartoon? It was awesome. I used to love it as a kid. And here's my point about inflation, right? When you look at inflation down here, what we've got is the month-on-month, quarter-on-quarter figures. They're super low. Okay, I mean like super low. They're as low as they've ever been in the last 5 or 10 years. Okay, so why is inflation permanent? I see it as being transitory, right? Yeah, we had a flip based on supply chain and based on commodity price rises. Now, less so. And guys, a couple of things I wanted to talk to you about. I'm not going to get it too much into foreign exchange. There's a couple of things in here, and I don't want to steal Ainslie's thunder. But I will just comment very quickly on what happened around the Cushing issue. So Paul nailed it. There's a bit of a problem at Cushing. When you look at this chart, the percent of working capacity, in other words, the amount of oil that's being stored at Cushing, which, by the way, is an insane amount of oil they can store there, and they've been adding capacity over the years. But in percentage terms, it's about as low as it's ever been, and that's pretty important. Why is it important? Because it means right now the oil price at the very front end, right, literally oil for delivery today, this month, this time, is expensive compared to what it is in 3, 4, 5, 6 a year, 18 months time. So what's going on is the prices are high in order to encourage people to bring the oil out of where they've got it, be it in the ground, be it in a pipeline, anywhere, be it in a tanker on the sea. Let's bring it out and make sure it's delivered into the current market, because right now we've got a shortage. Some of this has been caused by some infrastructure issues around some of the pipelines. It doesn't matter what the cause is, but that's why you've got a big price, a big high price in oil in the December contract, up at $81. For those of you who just about see it, tiny font, I apologize. It's $81. But if you go out to November 22, which is this one at the bottom, we're sitting down here at 72 or 73, $72, right? $72, which actually, by the way, I think is cheap. But anyway, that's a discussion for another day. If I was going to take positions in oil, I wouldn't be buying so much in the front contract right now. I'd probably have some, but I would probably be thinking about stretching out down the curve, where if you go out even 18 months, you can get oil in the 60s. Now that's got to be cheap, hasn't it, compared to where we are now? Interesting, isn't it? Okay. I'm not going to talk about the overall market. Ainslie will talk about that. I'm not going to talk about the gold market as well too, because Ainslie will cover that. I think it's something interesting going on there. I just want to talk very briefly about cryptos, right, and what's going on in the environment. I've added these. I'm now talking about the Super 7. Whenever I talk about what's going on in the world, I need to look at 7 markets. Ethereum for me, it's right at the bottom. It's like 6A. Rather than being like 7, because it's not really big enough yet, but let's call it heavily traded, and that's good enough for me. Where I think there's something going on is that I think in the past you may have seen inflation, you may have seen negative rates. That normally is a great bullish signal for gold. Where's all that speculation money gone? Maybe it's not in gold anymore. Maybe it's sitting there in the cryptocurrencies is the reason why they're doing very well, because that speculative money has moved into something else that's more easily tradable, probably with less margin. So there's a technical reason why you'd be in crypto rather than necessarily in gold. So gold maybe is a bit of a laggard, but who knows? We'll see how that develops. But here is Ethereum. Put some Bollinger Bands on it. Guys, it's sitting in the top Bollinger Bands, has for the last 30 days or so. Don't forget Ethereum has a 40-day cycle, so we may be getting close to a turning point again where it maybe consolidates for a while. But right now, it's looking about as bullish a case as you can possibly get, sitting within the top level of the Bollinger Bands, 20-day moving average, touched it once, another, a great buy signal, and then it's just kept on going and going and going. So you can't be bearish of this. Guy Paul, that's pretty much it for me. I hope that's a quick scoot around the world. And for anybody who wants a longer explanation, please just sign up for that session at the Trader Cafe and enjoy this presentation I've given in 5 minutes. Well, that takes about 45.
Cheers, Julian. If they want to watch the Trader Cafe, they can catch it on YouTube, they can catch it on Facebook, they can catch it on Twitter. All recordings are available from there. Just going to ask you, Julian, if you're saying that the back end futures contracts look better value for oil, buying around $60, buying spot oil right now today, there's some risk in that right now.
Yeah, there is. And you can see from the price action the last few days, right? For anybody, please, guys, you all have a WTI, and Ainslie will talk about this in a minute. The price action this week, even on Thursday, was pretty insane. I think it had like a $3.50 range, right? So this makes stops incredibly difficult. And this is the key point, right? So if you think about risk, always think about risk and what I'm trying to risk and what the reward is and all of those things, right? Yeah, great. If you're buying it at the bottom of a 3-day move, of a $3 move, then that's awesome. Right. But however, that $3 move, if you're trying to get a long position on somewhere in there, how much risk do you have to allow for? You got to allow for $2 to $3 of risk. Well, that means you simply can't take as big a position. Okay, so this is really simple, straightforward stuff. Or you might well say, to Paul's point, screw that, let's go and trade something that's not quite as volatile, as a bit more directional. Let's go trade Ethereum, because look at that, that's going up. And it's going up in a nice controlled fashion. There's no volatility there.
One of the really cool things about Julian, is you can just jump on Fusion and buy, and not on the HW accounts, but on a Fusion personal account, you can just jump on that. You can trade Ethereum 7 days, 24 hours. You can trade Bitcoin 7 days, 24 hours. If you are into all this stuff, now we have access like we've never had before. And with ETFs coming on Bitcoin, there'll be even more access for those that want to get into it as well. Cheers, Julian. Thank you very much. Thank you for the last hour. You've been hard at it, so very much. Thank you very much. Look, from macro markets, we're going to go and have a look at fundamentals. Still looks to me to be a fundamental-driven market. And our fundamental expert is Alexis. Alexis, how are you?
Hi. Yes, great to be in again. let's look at fundamentals. So something really interesting came up, I think, just the last couple of days. The Bank of England has reversed its decision to hold, instead of increasing interest rates, they've actually decided not to. So what happened was, I think the last Thursday, Friday, the pound actually fell more than 1%. And it was a bit of a surprise because I think in the run-up to the decision, there was quite a lot of expectation that the Bank of England would actually increase its interest rates, right? So it dropped, I think, 0.5% against the US dollar on Friday itself, right? And 1.5% since last Friday. So this is the pound's worst run since August. And I think a lot of investors were caught off guard, especially after Thursday, where the Bank of England refrained from raising its benchmark interest rate. Prior to that, the pound has been holding pretty decently because there was a general expectation that the central bank would increase its interest rate from 0.25% from its current historic low of 0.1%. So what's going to be happening next is what will happen with the pound. I think the negative signs for the pound, the weight on the pound is, it's heavy right now. And the pound's 2-year bond yield, which is highly sensitive to rate expectation, actually also fell about 0.4%. So what's possible is, the next question is pound going to consolidate, and does this mean that after the pound actually tanks, will there be buying expectation, or will there be opportunities to look for buying into the pound? So before we do that, just a quick look again at the general statistics, and I'm just going to share a screen over here. So this is what I like to see. I like to see the general statistics of the pound. So if you see the latest economic data that has come out, I think what's interesting is the UK has done a pretty decent quarterly, GDP pop, right? It's got about 5.5% the latest quarter, which means it doesn't mean that it's in dire straits. In fact, comparatively to the rest of the economies, 5.5% in terms of quarterly GDP means that there's some kind of productivity going on, partially also probably to the fact that the UK actually has been going on ignoring COVID, right? So economic activity has been going on as per normal, right? So the only thing that kind of caught us off guard is that, interest rate, instead of going up to 0.25% as expected by everyone, it's maintained at 0.1%. And what I think that will do is give us buying opportunities into the pound in the next couple of weeks. So we're going to look at some of the pound pairs, because what I think what I'm going to do is I'm going to erase some of these old lines. So what I think is going to be interesting is, the pound has plummeted, in a way to some of the previous horizontal levels, which makes this interesting, because if we look at the statistics the numbers coming out, the economic data coming out from the UK, it's not bad. It's not in dire straits. It's still pretty okay in comparison to the rest of the economies. So the next question would be, is this pullback just a shock on, being caught off guard with the interest rates? Will the pound be able to stabilize at this level and find its footing? And will there be buying opportunities at this level, especially looking at pound dollar, it's about 1.34-ish. This would be a key horizontal level. And I find it very difficult to believe, or I find it very difficult to see any numbers that say that the pound will actually go this way. So what I'm looking for next week is buying opportunities into the pound. There might be some consolidation while institutions are kind of figuring out whether or not it's good to go. So I think a little bit of caution is going to come into the pound, and that will be a good time, to kind of wait and see whether we do get, whether these key levels can hold. And if these key levels can hold, I expect to see a bit of consolidation in the next 1 or 2 weeks with a potential back up to the upside. All right, because even though the pound, the Bank of England is not raising its interest rates now, it doesn't mean that they might not in the future, especially we're ending the end of 2021, it does not say that, they won't raise interest rates in 2022. So I think there are buying potentials in some of the pound pairs. Some of the key levels have been tested, maybe more of pound dollar, pound Aussie, pound Swiss. Pound yen, I think a bit in terms of, I'm taking a technical point of view over here, I think there is a little bit more distance to find a bit of consolidation. Pound CAD, again, I think a little bit of influence of the oil trade over there, but it is also testing pretty interesting levels over here. Pound Kiwi. So basically, the pound really took a beating last week, and I think as a point, as a part of we always talk about trading it and not speculating it. So I think it's really good time to reassess our technical levels and see whether we can find buying opportunities based on the fact that the pound is still doing decently compared to the rest of the economies in terms of its numbers. It's not in dire straits politically. It's still kind of okay. So I think more upside to come for the pound is a matter of waiting out this next 1 to 2 weeks, which I think is going to be a week of a consolidation, as people are scrambling to figure out where this pound is going to go next. And my bias is towards the upside, so I'm hoping to see whether we can catch that wave in the next 1 to 2 weeks once that move starts to come in. That's all for me, Paul.
Cheers, Alexis. Really like it too. Boy, 5.5% quarterly GDP. That is a pretty good number, isn't it? That does suggest there's still a bit going on inside that economy that the market will like, right?
Yes, definitely.
Year on year, 23.6%. I know they're coming out of COVID, but that's an astronomical number, isn't it?
Yeah, it is.
So I'm with you, Alex. It's like, look at that as a little buying opportunity not too far away in the pound. We'll watch and see if that does turn up for us. So we've had a look at macro markets. We've had a look at fundamentals with strong cable. And now we're going to start having a look at some numbers and drill into some data and see what that brings up. Ash, what are we looking at today? What's the one that has the best numbers for us today?
Well, I think when we look at the dollar, it becomes interesting, and I think the fact that we've got such an important announcement last week when we had the tapering starting to come in, and it seemed to be a bit of a damp squib, but I think it's really significant. I think the fact that we are starting now the pullback effectively of liquidity, we're likely not to see the real effects for maybe a month, maybe a few months, but I think that going into next year, this is when caution really needs to start coming into play. I agree with Jules. I'm really concerned about the stock market and its current valuations. There are certain metrics which suggest that we are incredibly high in comparison to where the valuation should be. But as I say, I agree with Jules. What's the chart saying? And the chart says that we really should stick with a trend to the upside. There may be some fluctuations on the way, but right now, we just had this infrastructure bill passed as well by the Republicans in America. Not a lot really points to the timing for us to be moving significantly lower is in play. And if we look at the dollar as a bit of a metric. Oftentimes when the dollar is coming down, the closest correlation would be dollar down, stock market would continue to move higher. And we look at this dollar index is still very, very low. We haven't really seen this play out yet. We haven't really seen the bears come into play on the dollar index. But in accordance to COT data, the move to the downside is coming, and it's potentially building. If we look at the seasonals to see if we can get some kind of timing on this, it does actually suggest that we peak out sometime towards the end of November. So maybe the 3rd into the 4th week of November would be the point with in accordance to the seasonals when we see this start to come down and come down pretty hard as well. That's going to be, there's going to be a little bit of a timing discrepancy there. So it could start as early as next week. Could be a couple of weeks before we start to see the dollar come down if it plays out with the seasonals. Now, if we compare this to a currency, the yen is the hottest ticket in town. 99% on the 3-year, 99% on the 18-month, and 97% on the 6-month. But the seasonals aren't ready yet for the yen to rally. So the COT data and the seasonals aren't currently lining up, and they don't really line up probably until December. But if the yen was to start to move to the upside, and maybe we saw some kind of problem with the dollar, where do we then start to go? Well, the stock market would be under pressure, I would suggest. If the yen is bought up as some kind of risk-off protection, the stock market may well be under pressure. Gold and I think silver are the really interesting aspects here, because this is where we might start to see people still buying stocks and not worrying too much about buying stocks, but in the back pocket putting their protection, the protection in place. I particularly like gold and silver. I'm not really a fan of the Bitcoin Ethereum argument at these price levels. I think it's too loved for me, and it's a personal thing. I don't particularly like buying things when they are loved. I much prefer to buy things when they are unloved, and I still see the gold and silver market falling into that category, and I wonder whether we might start to see that come through. COT data at this stage is not supporting that, and again, this is going to be a timing thing. 38% is all we've got really for the COT data on the 36%, 62 on the 18-month, and 18 on the 6-month. And if we look at the seasonals, gold would tend to start to rally sometime around about the middle to the end of November. So I'll be looking into that. But what the data is suggesting to me this week, mate, is that there's not really a lot that I'd like to be committed to, but there is a lot I'd like to get ready to be committed to.
Mate, I've got two questions for you. When you do those numbers and say 36%, 33%, 30-odd%, what?
So that's the index. That's sort of like, that's telling us when we're looking at the.
They're telling us how many are long, how many are short.
It's a calculation between the long and the short. So when the percentage of the index is 80% and above, it's telling us that the commercial the commitment of traders is bullish. When it's below 20.
Japanese yen 99%. The professional traders are long the yen.
Yes. Very bullish, because it's not only above 80, it's way above. It's near the top end. It's 100%. It's as high as you can get.
And gold in the 30s tells us that the professional traders are slightly short, but not particularly committed to it.
Yeah, I when anything between the 20 and 80 band, I see that as kind of benign, and it's not a number that I'm interested in. With COT data, I'm really interested in the extremes, and the extremes are below 20% and above 80%. So extremes this week, definitely the dollar is at 5%, definitely the yen at 99%. So this week it's pushing us towards a dollar yen short if you look at the COT data alone.
Mate, it's going to be an interesting wind out of this Fed tapering thing, isn't it? I'm pretty sure this is something along the lines of we'll worry about inflation when we've got full employment. Now, that suggests to me that they know how to taper.
Absolutely, and it also suggests that they're very, very concerned about moving. They're almost. It feels like they're changing the goalposts and they're pushing them forward and forward and forward. Or they know something already, but they didn't want. I thought Jerome Powell was quite professional the way that he batted away some of those more difficult questions, and he managed to kind of get in this vague language about unemployment. He didn't really give us any number. I think so.
Yeah, sometimes people forget just how good these guys are. You don't get to become the head of the Fed because you're average, right? These guys are amazing, not only at understanding it, but also speaking it, right?
Absolutely. And on that front, we don't take what they're saying as read. We've got to continue, as Jules said, we've got to continue to watch the price action, but we've also got to continue to watch the numbers, because what are the numbers saying? And the numbers are suggesting that tapering and potentially the interest rate hike might just happen a little bit sooner than people think. But the most significant thing to watch, and we haven't really got time to go into it fully, but the most interesting thing for us to now watch is the bond yield, because that raises interest rates through the back door. So we're talking about interest rate going up, fine. We all consider that interest rate hikes are all to do with the Fed and them changing the interest rate. Not the case. The bond yield will tell us whether the interest rate goes up on a day-by-day, week-by-week, month-by-month basis. Now, so far, the bond yield hasn't really performed. But if that starts to get up to 170, watch out stock market.
Interesting. I've got to say, Ash, I reckon that would be the sentence I've heard more than anything else in trading in the last 5-10 years. Watch out stock market. Watch out stock market. And it's just gone while we're all talking about it. Fascinating thing. I think, it's one of the things, Ash, that at the end of the day, what Julian says and what you says is completely right. At the end of the day, the stock market can't keep going up with no basis to it. Eventually, there has to be a correction. Doesn't mean we're going to up 30% a day. In fact, we can't anymore up more than 6% a day, maybe 7% on the US stock markets. I don't think there's going to be a massive crash personally in a day, but it can't just keep going up forever. It really can't. At the same time, I bought it last week. Why not? If it wants to keep going up now, I'll take the money, right?
Well, this is the thing, and I suppose this the reason that we can say with confidence that it can't continue to go higher is because at some point it doesn't return what investors are buying. And but the earnings season has been stellar. I mean, the problem is, and this is where you do trust the numbers, but then you go, oh, but hold on a minute, those numbers can be massaged. The numbers are being massaged, you know, and again, it's a conversation that's way too long for here. But the way that these earnings have been better than have come out way better than expected aren't necessarily because they're selling more products and they've got more customers. There are different ways that they can achieve those same numbers, share buybacks, you know, lots of different ways. And this is where it becomes a bit dangerous. And you're absolutely right. Stock market's going up, just buy it, but be aware that a turn could come. And if it does, and it's at these elevated levels, the turn could be pretty hard and swift.
Well, it's one of the things, and I know we need to move on. We've got some great people coming to see you not far away, but one of the things that I look at this stuff and I just go, I'm really thankful that I'm trading this stuff on a retail forex broking platform, even though it's an indice, because I can put a stop loss on there.
Yeah. And
look, I might get slipped a little bit, but I'll get slipped a little bit, but I'll get out. Those guys that are holding physical stocks are going to get stuck in this. And those of us that have got an ability to put a stop loss and go to sleep at night and know it's going to be okay, really helpful. It's just, if you're in Bitcoin at the moment, you've got to have a stop, and you've got to understand that everyone says it's going to go up to this day, then it's going to come down. One thing that won't happen is that.
Yeah.
You know, that will not happen, right? Someone's going to front run that. Someone's going to hold on. It won't be that. And that just means you've got to be, you want the ability to get out of your positions with some money banked in profit if you can. But I've got to let you go. Thank you very much for your sharing. I really do appreciate it. Always interesting to have a look at the numbers. Thank you very much for that.
No problem.
Now, finally, after several months this year, I think we're finally going to have a smiling golden girl come and join us. Ainslie, our golden expert, massive year last year. She's watched gold go sideways for months. All of a sudden, we're on the way to a breakout. Ainslie, is it going to keep on going?
Hello, everyone. And finally, what can I say? I've been patient. You've got to say I've been patient, Paul, haven't you?
Yeah, indeed.
Absolutely. And just while I grab a screen, I just need to move some stuff out of the way. Screen one. And get that moving around. It's not doing it for me. Sorry about that. Screen one. Let's share that. Tell me you've got a
got it.
A nice gold chart.
Look at that. What time frame is that? 4 hours. My gosh.
Yeah, it does not look quite spectacular. But what I want to do is put it back into perspective with what is happening on the daily, and you look again on the weekly, and you just say, well, hold the phone. We have had that $500 billion infrastructure package approved, and look what happened. Now, beforehand, we had a bit of nonsense going on, and I've got to say I took a nice little bounce off the 200, not expecting anything too much, because if anybody has been listening to me for the last couple of months, I'm looking for a nice strong close around the 1830 mark, and the rest of it is just bits of trading, it's just bits of there's no strong flow, there is no strong, you get down here and bang, it goes back up again, and bouncing off levels. And we all know with gold, we have nice strong levels, but that infrastructure bill that was passed on early hours of Saturday morning, hey, hasn't that been great? And finally, we had this lovely, lovely big move.
Can I just ask for you, on gold, you use a simple move. That's not an exponential, that's a simple moving average on gold, isn't it?
Simple moving average on my 200.
Yep, cool.
The rest of them, the 50, the 20, and the 100, I show EMAs, they're exponential. But 200 simple moving average is the green, which is your international standard coding for coloring. The blue is 20, red is 50, gold 100. So they're standard international colorings for your EMAs. But yeah, always simple on the 200 moving average. And the reason I have those on my chart is because that's what other people look at as well. And when you're looking at this and you can see the movement, when it reaches that particular area, you can expect a bit of volatility, a bit of a slowdown, and you know how to manage your trade. So that's a really important thing to take away with why you mightn't trade those particular things, but having those things available and understanding what's happening in the market is going to help you with your trading and how you're going to manage it. And the other thing is to realize, have a look on the daily. On the daily, if I squish that up a little bit, we haven't We haven't got out of this huge range. Now, following on from where Ash has said, the US dollar is looking for a bit of a turnaround in the third week of November. Have a little guess about when I'm really going to get excited if we have a nice strong move above 1832 in about the third week of November. I know it's a timing thing. You got to love it. And if we actually have gold to play around and play along with seasonals, probably for the first time this year would be really, really nice. But the other thing to have a good look as well at is silver. Ash mentioned it, but I've been keeping an eye on silver as well. It is in the same boat. It is a bit of it has been lagging, but just remember, until we get that nice strong close above this level, 1832, it has proven time and time and again over the last couple of months, it doesn't want to go there. Until we get that close, we might just end up back in that range. But guys, keep a really good look on that. But yes, we did have the impetus with the fundamental news on Friday night New York time, obviously, with that being through, the package being put through, and there is apparently another $1.2 trillion worth of a package to come behind it. That apparently hasn't quite gone quite so well as this one, but this is what we're looking at. And if everything sort of stacks together and we put all the little building blocks together and we don't have Jenga fall down on top of us, I think we're ready to start looking into the seasonal rally that we've been waiting patiently for. And I've been sounding like a broken down record while we've been looking at this for months and months and months. So hang in there, hang tight. Let's see where we get to. The big level, as you can see, is the top of that range. I need a proper close above that 1832. I wouldn't be surprised if we don't get that until about, I don't know, about the third week of November. And then let's see if we're off to the races. Quite literally. Paul.
Cheers, Ainslie. Nice to see a bit of spring in your step. Will come back into oil lately. They have reversed this week, haven't they? The oil that's been the gold seems to pull back a bit, and gold has been going over all of a sudden, taken off. Look, next up for us is our crypto expert, Shukri Hamid. Shukri, are you with us?
Yes, I am.
Mate,
it's melting up.
Sorry? I've got some other things to talk about before you do, mate. My fusion's down for the day, but Bitcoin's on the Sunday rally, hasn't it? It's back around 62,000, isn't it?
Yes. And that gold makes me smile. You know, I bought physical gold I haven't bought gold since January 2020. So I bought the first batch of gold on Friday last week. So I'm glad that it went up.
Yeah, you've been telling me for
not Friday, the week before. The week before, I bought gold for about 10 days.
I'm pretty sure I had a word with someone the other day and said I thought the gold rate looked a bit more real. So nice to see you in there, mate. So, mate, what's happening in the crypto world? What can you tell us?
Okay, let me show you what's happening. We are about to go into our most bullish period. I will show you this in terms of the fear and greed index. We are here now. So when people are greedy, this is when they're taking risk, right? So look at what happened last November. 1 year ago, look at that, look at that, look at that, look at that. And it went here. And when did it go down? Just before Chinese New Year. Now, it's not going to be in Bitcoin or crypto, it's not a smooth ride. But when this happens, something usually explodes to the upside, or something usually melts up. So Bitcoin is looking good. It clears this. There's nothing here. Look at that. It's all clear. And Plan B has November ending programmed at 98K. He has been spot on the pass since June, okay, for the month ending. So if we follow that programmable calculation that he has done, end of November is 98, end of December is 135. Let's see whether that comes through or not. But I think the most exciting thing is Ethereum. Yes, we are going crazy about the gas price, but this is Ethereum. The more we get angry about the gas price, the more it goes up, because the more Ethereum goes up, the more we consume for gas, the more Ethereum has been burned. And for the first time ever in life, Ethereum is now deflationary. It's like, it's not expanding anymore. There is less and less Ethereum to go, so that should be good of the market. But having said that, I've told everybody, right, this is the millionaire season. Let's look at this. This is quite fun. This is really fun. Look at that. Next generation of crypto millionaire, Shiba Inu allows warehouse manager to retire. And look at that, Shiba Inu falls after 2.3 billion moved from a whale wallet. So this is what I'm telling you. It is this. Is it accessible to everyone, guys? This is what I'm going to tell you. The dirtiest little secret is the guys that are doing this are warehouse managers. I'm sorry, people with good degrees from Ivy League like me don't usually make it to become a crypto millionaire. I'm a freak, okay? I'm just kind of a freak. That's it, Paul. Happy millionaire season. You know where to meet us on Sunday, right? If you want to be a millionaire, there is still time. There is still time. Okay, Paul.
Mate, I am looking forward very much to Sunday afternoon where you give your Wish members a look at your $1 million trade. I've never heard you say that before. I'm so looking forward to getting in there and hearing what you got to say. And like I said in the Wish show, I already have my money on the way to my account, so I can do what you say. I don't mind. When you talk $1 million trade, I start moving some cash around. There's no question about it at all. Cheers, mate. Thank you very much for that. Now we're going to go back to Ainslie. Ainslie, this Cushing, Oklahoma thing's a bit complicated. Oil's a bit messy right now. It's been brilliant. It's been brilliant for a lot. It's just been brilliant for a long time. But right now, just a little bit untidy.
It is a little untidy, and I've got to say, when OPEC Plus say that they are going to hold tight on keep steady supply and production steady, and the price drops, you've got to have a bit of a, I don't know, maybe I'm just a cynical old I'll go light on the old trader, but bit of cynicism with maybe the fact that they chose to ignore Biden and Europe's request to increase production on supply, therefore on just to bring the prices down. And they very politely said, actually, I don't think they were that polite about it. They just said, no, we're not going to do it. So as you can see, there's been a lot of nonsense over this last week. And despite what there should have been happening in the market, and we know there should have been a retracement from a technical point of view, and look at it, hey, we've got the retracement that we expected after a double top. It came down quite a bit of a way. Now, maybe a bit of market manipulation, and I'm not pointing any fingers at anybody, because we've seen perhaps China dump a little bit of stock when copper prices were getting a little out of control, and they felt the need to sort of like massage the prices. But maybe that's something that's happened here, because if you're trying to work out, you've got Cushing. Now, Cushing, just to explain, in Oklahoma, it is the largest storage facility for oil in North America. And between North America and China, the numbers tend to fluctuate a little bit, not much, as to who is the biggest consumer of oil. Having Cushing at critical levels. Now, they reported on the 22nd of October that levels were starting to get to critical levels. Now we're getting to a point where they just don't have it. Also, an announcement this morning that I noticed in the press, it was more to do with how they're going to try and combat this, because OPEC are playing ball and we're at critical levels in Cushing. You would expect to see the prices of oil just go flying through the roof. The infrastructure bill certainly didn't help that as well, because obviously with the increase in manufacture and all the rest of that goes along with that, that's going to put a bit of pressure on the requirement and demand for oil. So you add those things up, you don't expect to see a drop in oil prices. But what they had announced this morning, earlier, or probably just before close of business in New York, is that they're trying to turn on the taps for their shale the shale oil industry in the US, and get that pumping as hard as quickly as possible. A lot of the wells that came offline with the hurricane and all the damage that was done a couple of months ago, apparently they're under a little bit of pressure to get that back up and running pronto. So what we're going to see, I don't know, if that's going to make a big enough impact when you've got Cushing at they're below critical levels. We've got OPEC saying steady as she goes. No, we're not actually going to increase that supply. I don't care what you say. I think they're enjoying a little bit of upside. I actually feel, Paul, we're really going to be heading north again. I just don't think the shale industry in the US is going to make too much of a difference to the critical levels that we're seeing right around the world and the controlled supply of oil. I just think we're going to see oil. We've talked about it, and I think we're going to see triple digits by the end of the year. So hang on to your hat on this one.
Yeah, look, I've been, as you know, Angie, I've been with you. I've been calling for, at least mid-90s by the end of the year on oil for quite some time now. And I don't see any reason to do that, to change that. I do think, as I said earlier on in my piece, that it's time for amateurs to get out of this market and be careful, because the Christian Oklahoma thing is complicated. There's volatility. We could see a big move in oil that's like this. And if that's the case, I think you probably, as a retail trader, you've got to understand the professionals are going to beat you. They know more about this stuff. They understand. They get the information before you. They will have moved this market before we know about it. And as a retail trader, for me, it's time for caution. And I'm holding on to some longs in oil, but we'll see how they go. I'm not taking any new positions in oil at this point.
Yeah, I mean, just have a look what happened. This is Thursday, crude oil inventories. And it's just like, hang on a minute, they came flying back down. And that's craziness, because the inventory levels are critical. So, like I said, I'm not cynical, and I believe in true market forces, but maybe there's a bit of manipulate. Who knows? I'm just being speculative, but it is hard to understand when you've got the fundamentals, and we know oil is really touchy when it comes to the fundamentals, to see a decline in the price when OPEC are just still holding it quite neatly by the neck and just saying this is the way it's going to go. So let's see how it pans out. Please be careful. We're seeing some really big moves on information that's not actually lining up with technicals at the moment. So just, retail traders, be careful. Wide stops on this one if you're going to go hard, because it's moving.
Thank you very much, Angie. Thanks for that. Look, one of the great additions to our show recently in the last few weeks, months, really has been that some of the sessions are done live, and some of the sessions for those that can't be live with us have been recorded. Lloyd was going to be with us live today, but something turned up, so he has put a recording. So we're going to go and do currency strength matrices with Lloyd and recording. Following that, we've got Orlando on US dollar, and we've got Gordon on stocks as we run through the last three parts of the show. Always fascinating. Look, Gordon Scott has always did a course on the weekend, always interesting to hear what he has to say. Orlando the same, Lloyd the same. Going to be great next sort of 15 minutes as we go through the three recordings from the three of them. Maya, you able to play the recording from Lloyd, please?
Good afternoon, everyone. So today, let's go through the currency indices and see what we have, what's on offer. So last week, I actually wanted to trade euro dollar. So price indeed went down, but wasn't at the level that I'm able to trade. So this wasn't a trade that I'm able to enter. Now, interestingly, for cat series, I actually wanted to long for last week. Now, what happens is that I didn't get a long position, but I couldn't resist when price actually gave me a very nice looking lower high. Yeah, so it is actually at the same level where I wanted to trade long, but since it gave me a bounce, a break and retest with an engulfing bar, so I'm actually in this position. Yeah, so it's a normal trend trading move instead of me trading a cost break. Right. So now, with effect from this week, dollar is still looking rather strong to me. Although last week it didn't gain any good momentum, but after NFP we shall see how it performs. But this is still a very classic break and retest. We shall see whether it continues to rally. Now, other than dollar, I don't see any obvious strength in any other pair. Now, I put Canadian index as the second one simply because it's near a horizontal level. Yeah. So usually when price is near a horizontal level, I'm quite reluctant to trade the first 2 days. So just want to see if price will actually bounce off this level, 80, pending Monday or Tuesday bar, and then I will get the clarity. If it does, then definitely it'll be in one of my setups. Japanese index, you can see that price is actually hovering at the horizontal level. So I'm not quite keen to trade this until it gives me a clarity of where it wants to go. New Zealand currency, you can see that again price is really in the range. It's not bouncing off any significant level. So I'm just going to leave this out. Now Swiss is actually interesting. So Swiss onwards, downwards, I would think that all of them are weak, display signs of weakness. So been saying for the Swiss index that price would possibly rise up to the horizontal level and the channel. And so last week, it didn't show the weakness that I was waiting for. Instead, it continues to rally up to this level. You can see a very nice doji bar. So I will keep a close watch and see that if there's indeed any sort of significant rejection from this level. If it does, then it'll be I would say it'll be a very nice trade all the way down. So this will be one of my classic long-term trades. Not classic, traditional long-term trade if it happens. The Euro index price is still below a horizontal level, display a doji bar. So I have no reason to think that it will stop its downwards trajectory. So gonna find any opportunities I can short. Pound major weakness. So price is near a level, I would say. Yeah. So it wouldn't necessarily stop me from trading it because it still has space to actually travel below. So this will be interesting in the coming weeks ahead to see if we can actually get in a swing position down to this level. And the last is the Aussie index. Now price makes a very, very nice break, retest, bearish engulfing bar on the weekly chart. So as such, this will be the most clear chart for me to actually short. So in the upcoming week ahead, I'm going to pair the strongest versus the weakest. That will be Aussie dollar. So you can see that Aussie dollar on the 4-hour chart has already displayed one cycle, two cycles. So I'm waiting for the third cycle, jump in, I'll be going for a happy ride. And next will be pound cat. So pound cat has been on weakness for quite some time already. So you can see that price is actually consolidating. Break. I'm just waiting for a retest before I can actually go in. Yeah, so Aussie dollar and pound cat will be the two charts that I'll be keeping a lookout for in the upcoming week. Thank you, and I'll see you next week.
As I said, always great to get Lloyd's view on the market, and always very, very accurate. Let's go from here. Let's go straight to Big O, talking US dollar, over to Orlando, and then we'll be talking to Gordon about stocks. Mike, can you play a Big O's recording? Thanks.
All right, traders, Trader O here, and let's talk about the USD. So this was a very big week for the US dollar because on Wednesday, the Federal Reserve announced they were going to start tapering this round of quantitative easing on about $15 billion per. Right, so this is bullish for the currency. But let's have a look at what happened on a Friday. So on Friday we had non-farm payrolls, and there was a big beat in job numbers. Right? 531,000 jobs were added in October, with a previous number of 194,000. But if we look at the average hourly earnings, the average hourly earnings month over month disappointed, right? While the unemployment rate also beat previous numbers. So I'm always looking at the average hourly earnings because to me it doesn't matter if we get more jobs added to the economy whilst the average hourly earnings are decreasing because with the current rise in inflation, wages being so low are not going to be sustainable. And let's go to the chart and let's see what happened on our Friday. So let's start by looking at the daily chart. So this level on the DXY, this is the US dollar currency index, the 94.60 to 94.70 level is quite the big level. I've been talking about this level for a while because this level is the pandemic lows right here. Well, not the pandemic lows, but right here on March 2020 when the pandemic hit the markets or hit the world actually. And well, then we had that spike, of course, and when the Federal Reserve started this massive round of quantitative easing, of course, the value of the US dollar decreased. But what's important to notice here is that when price broke with this level, right? When it retested this level, we saw a depreciation on the USD of about, let's call it a 6%, 5.9%, right? and we haven't been we haven't seen this level being traded since September, at the end of the September 2020. Right, so this is the daily chart on DXY. I just wanted to show you that level and why that level is massive. So let's go to the 4-hour chart and let's have a look at what's going on. So if you notice, right, this pink reddish dotted line on my chart is the previous month highs, right? So October highs and September highs are basically at the same level, right? Again, you could say that October highs printed a new high, and last Friday printed a new high. But again, levels are zones, they're not actual lines on your chart. So to me, we've had flat tops for the past 5 to 6 weeks worth of trading, right? Now, this is the 4-hour chart, and of course that while saying this, I'm not saying that I'm looking for shorts on the USD at all. Why? Because if we zoom out on this chart, you can see that from the lows at the end of May 2021, we have been trading, or DXY has been trading in a extremely bullish structure, and it is a very structurable, right? So let's just see how much the USD or the DXY has appreciated, about 5.67%. So basically, it has erased all the losses that we saw from that retest on September 2020, right? So what for next week, what I'm looking at on the USD, of course, I'm looking for buys on the USD, right? So, and I have a bullish plan and a bearish plan. What I like about the upside is this level right here, the 92.20 to 90, I'm sorry, 94.20 to 94.30 level. This level has been pivotal in the past. This is a 1-hour chart, so right now we're talking about the shorter term, or the immediate term DXY trading, and it has been pivotal, right? Again, support and resistance or key levels are zones. So basically, my make it or break it level for bulls is between 94.10 to 94.27, 70, right? Let me just delete all of these things that I have here. So basically what I'm saying is this. On Sunday, for you guys, it might be Monday. For me, it's Sunday. When the market opens, I'm going to see how the US dollar opens. And if we get a bullish open, then my idea for longs on the USD is going to be valid. But if DXY or the USD pullbacks below the 94.10 level, then I really think that shorts should be in play. Now, again, remember that even though the Federal Reserve announced the start of, the tapering of this round of QE, and a bit in job numbers, you have to trade what you've seen or what you think is going to happen based on fundamentals, right? Because right now we're talking about the short term. So the structure or the immediate structure in this market is also quite bullish, right? So basically, I could see a drop to a real retest of the 94.10 to 94.15 level, and here is where I would look for some kind of reversal pattern to start looking for buys on the US dollar. But if this fails, the break and retest would be where I would look for shorts on the USD. Now, the market that I will play this on, I pound a US dollar, right? I like, the pound US dollar. Let's talk about this because on Thursday, the Bank of England came out extremely dovish after weeks of extremely hawkish language. So that was kind of a disappointment. I and I mean, even if the Bank of England would have raised interest rates by 15 base points, that wouldn't have been a surprise to the markets because uh, how hawkish Bailey's speech had been in the past. Right. So let's talk about this. Because of Thursday, how dovish the Bank of England came out, the pound crashed, right? Breaking with some massive levels. A bullish play on the US dollar would be actually extremely good to play it on the pound versus the US dollar. Because on one side we have a weak pound, and on the other side we could have a strong US dollar, which means that this market would have double the bearish pressure. So levels to possibly play this. Let's look at the 4-hour chart. Levels to possibly play this. I think I would be very comfortable with shorts on a bullish continuation on the USD, of course, at a retest of the 135.50 or so on the pound versus the US dollar. If the US dollar really opens very bullish, um, uh, I would look for shorts at the break of Friday's lows. Now, be aware of this candle. Friday's candle was and is very, in my opinion, very bullish, right? More so because it shows rejection at a massive level. But again, we don't know what's going to happen. What we can do is only plan for possible scenarios. So, if we get a pullback to the 135.50 and a clean rejection whilst the US dollar is rallying, this will be my play. Right? So, thank you, and Geoff or Paul, it's up to you.
Cheers, Orlando. Thank you very much for that. And now we've got Gordon Scott on the US stock market. Always great to hear what Gordon has to say. His video is about 3 minutes, so do hang with us. No Geoff today, so at the end of Gordon's session, we will wind it up. At Mike, can we play Gordon's recording, please?
Hello, everyone. Here's a weekend update for how the U.S. stock market closed out. Look at this. You can see energy rebounded in the most significant move in probably the past couple of months, because although we had what looks like it could have been a head and shoulders, it's now a move upward, constituting essentially a failed head and shoulder signal. And I don't know if you ever remember hearing me say it, but a failed head and shoulder is probably the most high quality prediction of all of the price patterns out there. The head and shoulder is not bad, but the failed head and shoulder is even better. Has anywhere from a 5 to 10% edge in over randomness in the probability that it's going to forecast making a brand new high. Looks like energy sector is on the way to making a brand new high with about a 70% confidence. Discretionary is just not giving up. That's, even though Home Depot's coming back, this is really, launching forward. So I think we're going to see more of that. Technology is firmly in the third spot of the three sectors over the past 3 months. So it's looking good for bullish sectors. What is the lowest sector on this list? XLU, utilities, healthcare, the second lowest. Industrials are just barely behind staples. Consumer staples, healthcare, utilities, those are the three defensive sectors. The least amount of money is going into them. So what does that tell us? That tells us people aren't scared. They're risk on, baby. They are taking on more opportunity wherever they can find it. So naturally, you would expect that to translate into the Aussie yen would also be in a bullish mode. Well, it has broken out a while ago, about a month ago, but it's kind of been drifting lower. It's made a series of lower highs, lower lows. And this is largely because the US dollar is looking to become a little stronger, a little more in demand, because the Fed is talking about raising rates early in, not early, but in the first half somewhere of 2022. The US Bureau of Labor and Statistics also had this good news to report. Average hourly earnings are still trending up, even though they're a little bit down from previous month, but on average and so forth, trending higher. Non-farm employment change exceeded its estimated mark by a little bit, putting it back on track for a good and positive look. And the unemployment rate continues to creep lower and lower. All three good news, and the market added about a 1% bump. Of the three currencies that show the best possible setup, probably the US dollar, Japanese yen offers the bigger opportunity, assuming it can break through its support, its recent support, and retrace all of the moves that it's made through the month of September and October. Be sure to check out my trade ideas 1 hour before the market opens in the US on Mondays.
And on that note, we will thank you guys very much and wish you a happy Sunday. It's great to get the team out. I hope you've got lots of insight. Always nice to see the market. I looked at it from so many different angles, from so many different experts. I hope that the idea of it obviously is to bring some clarity in one point. And what I encourage you guys to do is perhaps pick one or two of these guys and really follow them. So thank you very much for your support today. Great to see you guys. We'll be back next Sunday at exactly the same time. We'll have the team back looking at the market from all kinds of different views to give you insight you can't get anywhere else. See you next Sunday. In the meantime, trade carefully and remember, if you stay calm and make good decisions, it all works out in the end. Take care.